Hi traders, and welcome to another strategy video on my channel. So today we're going to be talking about the Fibonacci sequence. And if you're not familiar with the Fibonacci sequence is, I would first recommend Googling that and just learning a bit of the background. And let's get started. So the first thing we always want to do is identify a low and a high of our trading period, and then we want to draw a Fibonacci retracement from that period. So simply hit R if you're on CryptoWatch to get the Fibonacci retracement tool. And if you had seen this bearish run, and then you see these tails, and then you see this bullish run up here, and you see this, the question always is, where do I buy? A lot of traders who are more beginner like to buy here and here, even though it seems counterintuitive. At this spot usually is when a lot of people buy, and then you get a pullback, and some of the not as smart investors get out, and you have that here too. So the best thing to do is to actually not be greedy and to try to just buy into something because it's skyrocketing, but instead to wait for a Fibonacci retracement. So if you look here, the Fibonacci retracement really gives us perfect levels to enter to put our buy orders at. So if we look here at this quick little bullish run, and then you see this candle right here, where would you buy? You'd probably want to buy at the 50% or the 61.8 retracement. Both would have been fine. For me, I would probably buy around the 50% retracement, just to be safe. I'm going to get into this trend. So I would probably put an order at around 142.5, 142.6, around here. I would have bought here, and I would have cut all this, all the way up to about 162 for a nice $20 Ether profit, which would have been fantastic. And then the interesting thing is, if you had not bought into this, and you had seen this occur, you could actually still buy into this market by drawing another Fibonacci retracement from that same low, but to the new high. And we can see here that this time, the 61.8 retracement held. So if you had seen this, and you were not in the market, and you had seen that the 50% retracement had a bit of support, but then there was an engulfment, and then you see a classic Morningstar formation, and you see this candle at the 61.8, you can be very confident that the market's going to be traveling upward, and you could buy here. So this is another really cool way that you can use the Fibonacci retracement, not only to put buy orders at, but also to find spots to market buy if you would like to. And we can see that this continues throughout the trend. As if we just isolate one level right here, from this low to here, we can see that it was the 50% retracement that was hit, and then price continue going upward, and that continues to happen until we reach a market top. So an important thing to mention is you can also do this in a bearish market. It's the same thing, except this time we're going to draw our Fibonacci retracement from our high to our low, like this. Now, in this situation, if you had bought at a very bad price, like let's say around here, and you had seen this, and then you see price move against you, and you're a little afraid, you want to get out of this trade. You don't want to usually get out around here, because this just looks quite bad. You usually want to wait for a retracement back upward, and then you can safely get out there. So if you had seen this, and then you had seen these strong bullish candles, and you wanted to exit this trade, you could exit around the 61.8 or the 50% retracement. So if I had bought around here at 243, I would probably want to sell again at 243 right here at the 61.8 retracement. And if I was in the market and I had seen all these tails right up here, meaning that this is probably the highest that the market will go for some time, I would have gotten out right here, simply just looking at the retracements. And even today, the Fibonacci retracement would have served you very, very well. If you look here, we had a local low of 190, and then we had a high of 220.54. And if you look here, the 61.8 retracement was touched, and then it rebounded immediately. As you can see, the 61.8 retracement here is 201.67, but the low here is 201.22. So the good news is you could have put a buy order in at around 201.7, and you would have had a perfect trade with no drawdown and just all upside. And that's just the power of using the Fibonacci system. And we can also see that here, but this time it will be the 50% that was touched right here. So you see 50% it gets touched right here from here to here, and then the market moves more upward. So if you had bought it around 219, you could have enjoyed profits up to 235. And if you'd still held in this market, this still looks quite bullish, so you could have held this and continued your upside. So that's going to be my first video on Fibonacci retracements. I hope you guys enjoyed the video. It's just always important to remember the purpose of this video is to show you guys that you don't want to buy when the market skyrockets upward like this, and you don't want to buy here and then have all this come against you. The better investor and the elite trader is going to just draw a retracement from here to here, and he's going to look for a spot to buy it around the 50% or the 61.8 to get a perfect buy to get into the market. Fibonacci retracements have been used for decades, and they're really nothing new, but they're really something that works very, very well in the market and better than any other indicator I think that's out there. So if you want to use this, I would go right ahead and let me know what you think of it. Thanks for watching.